Welcome back to Asia Market Wrap. Well, let's get a recap of our main business headlines at this half hour. Tokyo Electron, Adventus, and other Asian technology stocks advanced, helping to push the Nikkei 225 to a two-week high. A bullish revenue outlook from chip giant Intel raises optimism about global demand for chips. The U.S. dollar edges higher, rebounding from multi-year lows earlier this week as investors bet on a strong reading for U.S. jobs data. A new development in the China aviation oil fiasco as word emerges its parent company was aware of the unit's problems when it unloaded a 15% stake in October. Well, the debacle has the financial community asking if its problems are endemic to state-backed Chinese enterprises. Cheryl Liew joins us now with more. Cheryl?
Well, Sabrina, the key issue thrown up by China Aviation Oil's trading scandal is one of corporate governance and also transparency, something that investors have always been very concerned about. And the China Aviation fiasco seems to really confirm their worst fears. So we had reports today that the parent company of China Aviation, which is the Beijing-backed and also the state-owned China Aviation Oil holding, went ahead of a placement despite having full knowledge of the affiliate's widening trading losses. Now, in statements to the court, we have CAO's former executive, CEO Chen Julin, claiming that CAO Singapore had told his parent about his losses on October 10th. But not only was this not disclosed to the market, the parent company went ahead to place out a 15% stake on October 20th, just 10 days later. Mr. Chen also said that the parent company actually sold down the stake in order to raise cash to cover CAO's margin calls. Now, that placement was done through Deutsche Bank at a 14% discount, sold at 1.35 Singapore dollars. See where the stock is trading now. It raised close to 200 million Singapore dollars. Now, institutional investors that bought in included names like state investment agency Temasek, which now has 2% of China Aviation. If Beijing CAO did indeed sell shares knowing such information, this could be a case of insider trading under the Securities and Futures Act. China Aviation shares have been suspended since Monday. The Wall Street Journal described China Aviation as continually making two big mistakes. One, betting against oil prices, and two, throwing good money after bad. CAO Singapore was set up with actually a pretty simple mission: to buy physical supplies of jet fuel and import that to meet China's growing needs. Somewhere along the way, though, it started speculative trading in derivatives and kept going despite mounting losses. Apparently, CAO had options and swaps on 32 million barrels of oil, which meant the company was placing bets on more than double the amount of fuel that a large airline such as Cathay Pacific would consume in an entire year. So we've said this before, but the size of the losses is really pretty spectacular. Now, CAO has quite a few creditors now demanding payment. Mitsui & Co. in Japan asking for 144 million US dollars. Fortis Bank, Barclays Capital, Goldman Sachs, Standard Bank London, all other banks are also standing in line waiting for payment. Let's check in on how the China plays list on SGX are doing. They're still being hit hard today from the CAO fallout, especially China Fashion Holdings. That company unfortunately went public this week in Singapore. So the whole CAO case is a strong example of weak disclosure standards at Chinese companies. Of course, it's not the first time it's happened. In February, China Life shares plunged after auditors discovered widespread irregularities at its parent company. And the former head of Bank of China Hong Kong and some other leading executives were arrested this year on corruption charges. Let's speak now to our guest, Philip Chan, Research Director with Shenwan Securities, for more on the fallout from this story. Philip, the fact that China Aviation is such a huge fiasco, is this going to impact investor sentiment negatively towards Chinese stocks in the next few months?
I think it's just going to have a short-term impact, because as I said, we've had these scandals before, not just with China companies, even with Western-based companies. So the impact will be short-term, and but you see the China growth story is still quite strong, and there's a lot more issues to come out. It's basically the investors are just going to have to do due diligence on the companies as best they can.
Now, Philip, we do have one very large state-backed Chinese enterprise coming to the market soon, Air China. And some analysts feel that the China Aviation fiasco could hurt Air China's IPO when it starts trading. What do you think of that?
Yeah, well, actually, with because we're on the underwriting syndicate, I can't really comment on this issue. But just speaking generally, I mean, as I said, it may have an effect on the opening share price. It may not. But you see, as I've said, I think it's just a short-term. It's just a short-term factor.
But you know, surely, would it be fair to say that the corporate disclosure issues are much more of a problem at the state-owned or state-backed Chinese enterprises versus the privately owned ones, where presumably they have more controls in place in terms of internal management?
Yes and no. You see, because at the state-owned corporations, which is the majority in China, it varies in the standards of disclosure. There's a big variance, whilst corporate governance in general in China has been getting better, and markedly so in the last couple of years, it's still, say, below the standards you would expect from mature stock markets. So you are going to have these scandals that are going to come out from time to time. For the private enterprises that you talk about, again, that varies as well in the standard of corporate governance. You're not necessarily protected just because it's a private enterprise. In fact, I would say that state-owned corporations offer generally better protection to investors.
So Philip, it sounds like you're saying the onus is really on the investors to do all their own due diligence on any Chinese company rather than to rely on the government or exchanges putting into place sufficient, controls to prevent against such things happening.
That's right. I mean, you've got to look, dig pretty deep actually into, say, the background of the company and how it was set up. Because a lot of Chinese listings are basically restructured companies, which are then listed from parent companies. So you've got to look into a lot of intricate details. That's why the China markets are so difficult to analyze.
Yeah, Philip, this is Sabrina in the Singapore studios. We do know that China is trying to make an effort to increase corporate governance. Where are we in that evolution? I mean, how much more do we need to go before we see some major reforms in the system?
It's not a question of the reform is ongoing. However, it's the mentality of directors in China. The way they conduct their boards, the way they put the internal structures in place. There's a big variability in that process at different companies in China, so it's not uniform. Now you can the actual government institutes can put in place new laws and rules to sort of govern companies, but it's a way of how do you practice them. So it's a question of education and, say, putting it into practice. That will take some time yet.
Now, Philip, from the perspective of the markets, what's the best thing that could happen to China Aviation now? Would it be better for the parent company to let China Aviation go bankrupt and just as a lesson to other companies, or should it actually try and bail the company out to try and, restore investor confidence? What's the best scenario?
Probably the best scenario is for them to bail it out, I think, to improve investor sentiment, improve investor confidence. The state-owned corporations have generally tried to do that in the past with other listings which have gone wrong. So I wouldn't expect any different in this case.
Philip, thank you so much for taking the time to answer all those questions. That was Philip Chan, Research Director with Shenwan Securities, speaking to us from Hong Kong about the whole fallout from the China Aviation trading fiasco. Sabrina, back to you.
All right, Cheryl, thank you very much. And coming up after this short break, oil prices are up slightly in Asian trade today, but some traders say it won't be too long before they head back down. We'll find out what's driving market sentiment after this short break.